Hi there, and let me start the second FinTech Roundup with the updates on the news we've discussed last week. Ant Group's IPO is suspended. The official statement says that there are significant issues such as changes in financial regulatory environment. The media ties it to the new regulation on microloans, which the Chinese authorities has just imposed and which can affect one branch of the Ant Group's business. But I think it's just a slight delay and we will witness the listing soon. Reputational risks are too high for the Chinese businesses. US-China trade war has been quite bubbly from the Western perspective, but the positive attitude eludes from China.
PayPal's CEO Dan Schulman shared some details about the cryptocurrency's embracement. Crypto services will be extended in 2020, with Venmo to be included in shopping options with crypto as well. Central banks' efforts and future of digital wallets were also mentioned. The utility of digital wallets is rising, but so does the urge to store Bitcoin and other coins too.
Another proof of fintech adoption. Samsung Pay says that UK people prefer digital payments, while traditional methods are left behind. The survey suggests that almost half of the respondents don't remember the last time they visited a bank, and 61% also wish they had more control of finances. Meanwhile, 4 in 10 customers would like to have one simple banking solution, not an overwhelming variety of them. Yet, half of the respondents, 54% to be precise, admit security concerns while using digital payments.
Social commerce to dive deeper in our lives. TikTok partners with Shopify and allows 1 million merchants to reach its audience. Sellers will be able to run marketing campaigns directly from Shopify dashboard by installing the TikTok channel app from Shopify App Store. Once done, merchants are fully introduced to TikTok for Business features. Moreover, they can deploy in-feed shoppable video ads, selecting the product they want to feature using ad templates specifically for the commerce. Digital goods are also a subject of fintech solutions implementation. For example, Klarna and GameStop announced to provide buy now, pay later service. Earlier this year, service by Klarna was introduced to Etsy, e-commerce retailer.
Rocky start. That's how Lufax started trading at NYSE. The stock fell as much as 14.3% on debut, but pared some of the losses to close at $12.85 per share, around 5% lower the offering price. Well, what's interesting about this listing? It's the company's decision to go public in the US amidst the trade war and amidst the constant competition of big tech from the two poles, Western and Chinese. Chinese tech companies are a driver of innovation and competition, yet their services require significant localization in the West due to cultural peculiarities. Nevertheless, Chinese financial products don't seem to work or adjust properly anywhere outside of China. Western financial system is just way more expensive. Chinese fintech companies are well known on the global market. WeChat and Alibaba have set the fashion a while ago. For the most part, they were and still are serving inlands and Chinese travelers around the globe. But they also are eager to experiment, introducing QR codes, embrace AI into payments. For authentication, for example, they experiment with the e-commerce like marketplaces and digital advertising, new models and live streaming options. They created mini apps, virtual storefronts. Also, they are quite big on social projects, and China even has a state cryptocurrency. Interestingly, that the most fintech products from China are designed to be very, very inclusive for elderly people, for underrepresented, for very young people, for people living in remote areas, well, for everyone. And now, with everyone having a smartphone, the authorities and Chinese companies, they moved over the interconnectivity within few ecosystems. Ride-hailing company Didi Chusen, e-commerce platform JD.com, smartphone maker Xiaomi, and others have all begun to offer financial services, including loans, wealth management, and insurance. Chinese model is welcomed in other countries only with super strong localization, and that doesn't work for finance. It's not the question of translation, it's the question of cultural respect. Notably, India has become a battlefield between China and the US for financial and digital markets, and it seems like Google, Facebook, Amazon, and American big tech is winning. Usually, Chinese services are very easy to enter and are very cheap, which doesn't work in terms of financial services in the West. And the financial culture is also totally different. I mean, attitude towards investments and making money, savings, financial literacy, charity, and so on. So, we'll watch the race, and I promise refer to this topic again and again. Now, let's take a look at the numbers that the Western big tech has delivered in Q3.
Alphabet, Facebook, Twitter, Apple, Amazon reported earnings last week, and these reports proved once again that 2020 has catalyzed the fintech adoption. First of all, the digital advertising revenue have surged, despite all the political drawbacks of the year. Why? Because that's where the shopping starts, from building awareness and creating the demand. As it's easier to sell within the known environment, social media now becomes a point of sale. That's what my last video was all about. Please take a look. And with the upcoming holiday season and new habits for online shopping, the prospects for ad earnings in Q4 are more than optimistic. Facebook saw ad revenue in the quarter up 22% compared to a year ago, adding another million of active advertisers, reaching 10 million. The average monthly user base is up 12% from a year earlier and accounts for 2.74 billion accounts. The total earnings of Facebook are $7.85 billion in Q3, which is 29% more than a year before. Twitter's ad revenue is up 15% in the quarter, driven by the return of sports and delayed events and product launches. Twitter had 187 million daily users on average in the third quarter. That's up 29% from a year before and attributes to interest in politics. Amazon took a full advantage of this year and demonstrated a 37% profit growth. The company's other category, which consists of its advertising business, saw revenue rise 51%. Subscription services, including revenue from Prime memberships, climbed 33%. Sales from third-party merchants grew 55%, outpacing Amazon's first-party business, which also increased sales by 38%. Alphabet brought in total advertising revenue of $37.1 billion. YouTube ad growth was particularly strong, up 32% from a year ago. Search and other advertising categories showed 6% growth from a year ago. As CNBC reports, executives said that YouTube has over 30 million music and premium subscribers, and YouTube TV has more than 3 million subscribers. For a few curious facts. YouTube views for guided meditation videos are up 40% since March, and tutorials on how to make face masks have been viewed over 1 billion times.
I'm really looking forward to seeing the results of fintech performance by these companies as they dip their toes into the financial services. Do you own their stocks, or did you already diversify your assets and added crypto? Well, thank you for watching. Let's talk fintech.